Hello students and good day to you all. Today is the 7th of April 2018 and in this session we will go over the Forex market. We will have some analysis and we will talk mainly about the past movement and our expectation on the long-term side. So let's move forward to our chart station and we will start to talk about the Forex market with the euro in front of the US dollar. So first of all, let's go to a monthly chart. We can say that for a very long time, and I'm talking about since 2008, we can see that the market is bouncing lower and higher in a specific channel. We can even mark this channel. So the question is, where from this position we might cross the upper line, we might cross the lower line, we might continue with the bouncing. The thing is that right now we have a connection between the current downtrend movement and the uptrend movement that occurred over here. Let's add the Fibonacci scale on the chart and measure the corrective pattern in front of the uptrend movement. So as you can see, we went significantly lower when it comes down to measurements, and I'm saying significantly because usually we will see a bounce toward the 61.8% or the 50%. This is a logical territory, but we went even lower and reached the 72%, which is a very important rate when it comes down to the euro in front of the US dollar. Now the funny thing is that this movement occurred when Trump was elected. And I remind you that when Trump became the president of the United States, at the beginning there was a lot of fear when it comes down to the stock market, but just in matter of hours, not in matter of days, the market climbed back up again and showed that there's nothing to fear of. On the contrary, over here we see that the euro is gaining strength in front of the US dollar. And we can generally say that the dollar lost a lot of strength during this period. So there you have it, another good sign that the strength of the dollar has no relation with the strength of the local economy. And again, usually they will express the opposite correlation. So we were expecting the market to reach these territories. I told you that I'm expecting the market to climb up toward the 1.25 rate. And from this position, because we can see that we've reached the 72 level, I would definitely say that the potential over here at the moment is to cross the upper line and to start an initial uptrend movement, a larger uptrend movement, which will break this channel and will continue higher and higher in equivalent to what we see over here. Now that is a very long-term analysis, and in another video we will analyze the gold and you'll see that we receive a break between the correlation in the markets. Something is happening out there that changed the connection between assets as we were used to. It happened in the past, it's nothing new, just that we need to understand how the market is changing in order for us to locate a potential trade. I'm saying that because we see a potential of the gold to drop down, and it's not logical that the gold will drop down while the dollar will lose strength as well. But again, we see that beside having a triangle, meaning stock market, dollar, and commodities, right now we're in a square. That is the dollar, the stock market, the crypto market, and commodities. So a logical thing will be stock market and crypto market starting to climb back up again, while the dollar and the gold are losing strength in the market. That is my assessment, a very general assessment, but at the moment that is the image that I can see from the market. So a potential of breaking this channel and climbing back up again. Now, in order for us to express the potential on the Japanese yen currencies, and you know that the Japanese yen is a dominant currency, meaning that it's climbing up and dropping down in front of all the assets with the same measurement, and therefore we can use that as a tool to measure the markets. So right now we're going to move forward to the dollar in front of the Japanese yen. First of all, to see what is the potential of the Japanese yen generally. And in addition to that, to confront two dominant currencies and see what is our expectation again for the long-term potential. Okay, so this is the dollar in front of the Japanese yen. Again, very large uptrend we had over here since 76 yens per dollar, climbing up toward the 124. And right now fluctuating around these levels. Now in terms of structure, it seems like we're in a condensed triangle, meaning that our assessment is to see a bit more bouncing upward and downward to complete this structure, climbing back up to the 112, dropping back down to 108, and from this position we're expecting this market to climb back up again. So we just talked about the dollar losing strength in front of the euro and expressing additional loss. Again, it might occur right now and we might see that happening later on in some other formation. But over here, what we can see is that combining two dominant currencies, again, you can see the weakness of the dollar over here dropping down in front of the Japanese yen, and we can say that our assessment is to see an uptrend and a downtrend, meaning that generally we see a potential of this chart to express additional uptrend. But what does it mean in terms of the currencies? On one hand, we see a potential of the dollar to lose strength in front of the euro, while we see a potential of the Japanese yen to lose strength in front of the US dollar on the dollar versus Japanese yen chart. So in this case, I would say that the weakness that we're expecting to receive over here will come on behalf of the Japanese yen and not on behalf of the dollar. And I want you to connect the dots over here. If we're saying that the euro is expected to gain strength in front of the US dollar, and we're saying that the dollar is expected to gain strength in front of the Japanese yen, then connecting the euro gaining strength and the Japanese yen losing strength together will burst into the logical potential that we're looking for. Anytime, at any given time, what I'm doing, I'm trying to connect between two strongest and weakest assets. I'm not saying that they will be the strong and the weakest. I'm saying that right now, just analyzing these simple charts, the euro in front of the US dollar and the dollar in front of the Japanese yen, we already make an assessment. Now, from this position, what I would do if I'm trying to trade right now, I will move forward and analyze the euro in front of the Japanese yen to see if there's any potential in terms of the technical analysis based on what we're seeing over here. Another thing that I'd like to analyze will be the dollar index. And we can say that there's some correlation between what we see over here and what we saw on the euro in front of the US dollar. Some correlation because it's not accurate. What we can see over here is the weakness on behalf of the dollar. We saw this weakness on the euro in front of the US dollar. This fluctuation that we see over here, that is the channel that we've placed on the euro in front of the US dollar. Again, it's the opposite because over here, an uptrend is a stronger dollar, while on the euro in front of the US dollar, we see a downtrend as a stronger dollar. So that is the large trend. Right now, we're in a channel, and across beyond this bottom line will be additional downtrend potential. Again, we were talking about additional uptrend on the euro in front of the US dollar. So it all connects with the potential of the dollar to add to its weakness. And again, this analysis is on a monthly chart, meaning that it will take some time until we will see the progress of this potential. But even preparing yourself for a large scale potential is essential when it comes down to analyzing the market and being a part of the market for a long period. I'd like to wish you all the best with your trades. Have a pleasant week, and bye bye.